Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency in this video. But first guys, very short update on the Great British Pound. So because just a few days ago we have considered patterns that were forming there, and currently market stands at the culmination point. Actually, those who watched this video should remember that this is big hand shoulders that we discussed on the hourly chart. We talked about 2560 area for potential position taken in. You can see it started really well. So those who have positions right now, just think about managing stops, some control the risk, and let's keep watching what will happen. Because if you remember, we talked about this area, which seems very important strategically. I have explained why this is important, and we said about also these lows and this level, which is also important. Currently we stand in the beginning of this trading setup because we're watching for the hand shoulders and possible downside A, B, C, D. But when market will come to potential target of this pattern, it will be starting the second stage and will be really vital for the Great British Pound. Downside breakout could lead market significantly lower. And actually we already shared in the Telegram that some big banks talked about 1.20 level as a potential target for the cable in nearest time, because more and more statements sound from Bank of England that rate could be cut more than market anticipating right now. So that's just minor update on the cable. Now let's return back to the euro currency. On the euro currency, we're standing at the point where really explosive tricky mix might be formed on the different patterns on the different time frames. Just in the weekend we talked about monthly bullish grabber that might be formed here. At the same time, according to our trading plan, market has formed this upper direction and stands very close to the weekly MACD predictor. And within the couple of weeks, in this week and next week, we could get the bearish grabber in place, which is also might be important. For now, we'll keep watching for the patterns that we have specified in the possible upward continuation. Currently, market already stands in an area that seems actually some kind of the, let's call it the critical for bearish context. Recall what we said in the weekly report, that right around this area is a break-even point for the weekly trend direction. If market breaks it up, it means that weekly trend will turn bullish and bearish context will be destroyed. But until market is stuck with this confluence, weekly bearish context is valid. And actually this area is becoming some kind of the last outpost, last chance for taking the short position. This is actually not bad. It's just because you do not need to place some too far standing stop earlier, because you can just could place it slightly above this area and trying to take the short position. Currently, keeping all this stuff in mind, we should specifically take a look at the patterns that are forming on the lower time frames and watch for them with some perspective of the weekly direction on the situation with this resistance and weekly bearish trend. Because these patterns that stands on the lower time frames could become some kind of the final point in our prediction. For example, on the 4 time frame chart, take a look. With the performance that we have, we could get the butterfly with the target around 108.35. It's 127 extension, and actually it agrees with the daily upper border. If market shows downside pullback out from this area, I don't know, maybe during today's CPI numbers, maybe later when we will get retail sales, PPI or some other numbers, we could get some spikes here and we easily could get the weekly grabber this week. So that's the pattern that might be considered as a potential pattern that could finalize the upward action. So I'm already spoke about this XOP in the weekend, so I just do not want to repeat all this stuff. Besides, this is not really very important for now. If market will keep going higher, we will return back to this topic of this target. But for now, it is interesting what will happen around it. If we will get this grabber, this butterfly, potentially it might be used for taking the short position, because butterfly is actually bearish reversal pattern, and if even later market will keep going higher, at the first reaction we could get the pullback, because don't forget that we stand on the wide daily conference resistance area, and here's any pattern might become the reversal one. On the hourly chart, you could see that our suggestion of the hand shoulders was correct. Market really starts upward action, although as you can see it hasn't passed too far above the neckline. So entry opportunity here was really nice. We've got this upward action, and in general, guys, if you have long position, you probably could try to keep them for some time, but stay on the guard, because as I said, we're coming to strong resistance. Weekly context is bearish. It's most tricky moment, the moment of the break-even points between the bullish and bearish sentiment, and that's usually the area where big events happen. So that's why if you have a long position, don't miss the moment where actually bullish context might be broken, because don't forget that we have the weekly bearish context still. OP here with this ABCD pattern, if it will be formed, and if hand shoulders will be completed, stands around 108.26. So you can see that everything points on the same area, around 108.30. Butterfly target, OP, daily confidence area, all the stuff stands together in the same area, which potentially might be the point where we will consider taking the short position. In general, as I already explained in the weekly report, that theoretically, if you really trade on the weekly time frame, you could maybe not trying to catch the precise point of the reversal. So if you are sure that market will keep going lower, you could try to take position with the place above the daily confidence and see what will happen. Things that we discuss here is some kind of the fine tuning to this scenario. We will try just to get better entry points to minimize the potential loss. That's actually the major aim, a major purpose of all the stuff that we are doing on the intraday charts, trying to identify patterns, find the targets, and so on. So for now, those who have a long position that had been taken maybe here or based on our hand shoulders, you theoretically could try to hold them with the stop at the break-even points. This is possible. Concerning another long position that you could try to take with the target around 108.30, this is not actually forbidden. Theoretically, you could try to do this, but you will have to identify some point where you would like to enter. Your stop in this case has to be somewhere below the A point. So calculate risk-reward ratio, find the point that might be more or less interesting. I suspect that it might be interesting only if market will show retracement to the 107.60 area. In this case, risk-reward seems more or less attractive. For now, it stands even less than the half of the possible risk. So, not a really good point. Other words speaking, market stands at the point where taking the new long position is not as attractive as it was last week. Concerning taking the new short, following the suggestions that we just have made, let's keep watching for the patterns that might be formed, potentially butterfly, completion of the hand shoulders to the upside, and let's keep watching for 108.30 area and see what will happen around it. So if we will get clear bearish signs around it, that will be the point that we will try to take the short position there. Also, as you understand, data release might become the really decisive moment in performance on the Forex market right now.